even though some states are having some bumpy rides in that process. Let's get the read right now from Rebecca Walser of Walser Wealth Management. We've also got Jonathan Honig, the Capitalist Pig Hedge Fund Manager. Rebecca, if I can begin with you. Oh, by the way, we also have Luke Lloyd. I apologize, Luke. I did not mean
You're good.
Ostracize you there. But to make up for that, Luke, I'm going to actually begin with you then. How's that? Luke, I'm looking at, good economic news, good earnings news, but still worrisome virus news, not vaccination news, virus news. And I'm talking about the globe, and I'm talking about even restrictions in the United States against traveling, and particularly for these 80% of countries they advise we not go to at all. Is this an annoying worry or an excuse to sell?
I think it's an excuse right now, but I think the main worry for the most part is the different strains of the virus. The uncertainty around all of that, we don't know if the vaccine is going to work properly. We don't know what the future holds in that regard. But we can only control so much in the United States, with our politics, right? We can't control other countries. So I think in regards to the U.S., things are looking really good. I'm very optimistic with the reopening of the economy. Some states are still shut down. The top 7 or 12 states that are shut down account for over 40% of the unemployment. Once that gets fixed, I think the economy is going to get so hot, it's going to be like something we've never seen before. So, in regards to the U.S., I think we got to stick to U.S. domestic stocks. Overall, I think we're looking bullish for the next coming years.
What do you think of that, Rebecca? Bullish argument, maybe people, with all the better than expected earnings news and all the good guidance we've been getting, that they're using this, what's happening with the virus in some countries as an excuse to just sort of take some profits.
Yeah, I think that is true, Neil. I think what's happened is we had so much stimulus that the market got overheated last year. And thank God we had that instead of a depression. So I'm not saying that's a bad thing. But what I'm saying is now investors are actually looking at earnings season and saying, are these stocks actually worth it? And some of them might say, you know what, it's a little overheated. I'm going to take some profits and sit out for a little bit, let this sort of settle out, so let the volatility come and settle it out. And that's what is actually happening, I think, with some people. Even though the earnings season, as to Jackie's point, are good so far, people are still saying, gosh, are these stocks, we sort of priced in them doing well on the recovery. And so now people are really analyzing, are we doing well with the reopening and in 2021?
Jonathan, I always think this sentiment could swing. Those who pounce on a down day and think it's going to be the correction or the start of one have often been proven wrong. In fact, most of the time throughout this bull market, proven wrong. How do you play a day like today?
Yeah, well, Neil, the sentiment really has swung. Think about, look, the market is up. The Dow is up about 90% from March of 2020. Back then, no one wanted to be in stocks. Meanwhile, in the last 5 months, we've had more money come into stocks that is invested into stocks than in the last 11 years. So to our guest's point, yes, markets are forward looking, and a lot of people have been anticipating exactly what, thankfully America has achieved. Real, I don't want to say dominance over the pandemic, but people are getting back to work. The fundamentals have improved. But that's the fear, Neil, here as a contrarian. Markets are forward looking. So it's not implausible to believe that we could, quote, get back to work, that the pandemic could ebb, but that the market, forward-looking, could actually sell off even as the fundamentals continue to improve.
You know what I've noticed, guys, and Luke, I'll go back to you on this, that if people were worried about the bond market reflecting these inflationary pressures, it's not happened. What are you to make of that?
We've been talking about inflation over the past 10 years or past 20 years, and it still hasn't happened yet. Is it a concern 10 years from now from all the stimulus that we're printing off? I think it's absolutely a concern 10 years down the road. But for right now, how long is it going to take for inflation to hit, for it actually to work, or that trade to kind of work out in the bond market? Overall, one thing I want to add for the stimulus and the outlook for the economy in regards to the markets, if we get a worse off scenario in the economy or in the U.S. for COVID, we're just going to print more stimulus. That's been the story over the past year, is that Democrats love printing money. So if things take a turn for the worse, that's going to continue to inflate the markets. So I think it's, the winners win. If it's good, it's good. If it's bad, it's good. I think that's the scenario we're in right now over the next year, from that outlook.
Rebecca, it's been crazy times for cryptocurrencies and Venmo now announcing that it's going to make it easy for you to buy and sell these, digital currency plays. I'm wondering, though, the fact that so many countries are piling on to come up with their own digital currencies, I could see that hurting the dollar. But it's the first time it's hurting Bitcoin. What do you make of that?
Yeah, Neil, this is 100% where the new battle is going to happen. And I'm going to tell you and all cryptocurrency believers, and I'm not against cryptocurrency, but I'm going to tell you, once it becomes mainstream, which is what we're seeing now, the United States Treasury and the U.S. government are going to do something, because the dollar is the U.S. world reserve currency. And once it becomes mainstream and we can start using it as a currency and not an investment, so that means buying Tesla and Bitcoin, for example, and a lot of other things that are now saying, well, take Bitcoin. When it becomes a currency, watch out, because that is where the governments and the central banks of the world, the Fed, the ECB, Bank of Japan, are going to have to say, what is this going to do to the M2 money supply and how we control it? And that is very, very important. And people forget, Neil, in the 1930s, the government told people to turn in their gold because they weren't able to control the money supply with the run on banks at the start of the Great Depression. So don't think that cryptocurrency is the end all be all, because the federal governments of the world will say something. I'm guaranteeing that.
Yeah, and you know, I'll jump in. I'll quickly just say I actually think cryptocurrency, and I'm not a hater, but I think it's a great leading indicator of really risk writ large. Look, cryptocurrency couldn't have existed back in 2008, 2009. People didn't want to take any risk. Now they've got stimulus checks in their pockets. They're willing to take a risk on penny stocks, on crypto, or anything else. So over the weekend, we saw crypto start to dip. We've seen the markets dip today and a little bit this week. So keep an eye on crypto. I think it's the canary in the coal mine, if you will, when markets really start to take a dip.
You know, Luke, I'm of the opinion, and don't put any money on, in fact, run away, but I think it's too late to try to rein Bitcoin in. I mean, I'm not talking just because a number of ETFs are waiting at the runway to launch. They haven't technically, but there's already one in Canada that's hugely oversubscribed. And the vehicles and the investments in this and all the major players and marquee street cred names, you know, from Tesla, Goldman Sachs, a host of others, is proof that you try to untangle this now, good freaking luck. What do you think?
The more adopted crypto and Bitcoin becomes, the higher the chance that it becomes regulated. Listen, it's going to be volatile. There's going to be ups and downs in Bitcoin over the next decade. There's no doubt about that. But I think with the recent events like the Coinbase IPO, Venmo allowing transactions, and more merchants accepting Bitcoin proves that Bitcoin isn't going anywhere, and you should want a slice of the pie. There's only so much of Bitcoin that's out there. But things like Dogecoin, let's take a look at Dogecoin going up to 40 cents and being worth over $50 billion. You know, it's a joke. It was made as a joke. You know, when that happens, it definitely makes it look like everything's in a bubble right now. But the way I look at it is, if that much speculation is out there where people are throwing money into something that, you know, is a joke and has no fundamental underlying value, and nobody really wants to transact either, then I think that's a bullish case for Bitcoin in the long term. Because I think once that money flows out of those joke coins or the altcoins that don't really matter, I think that more money will flow into the actual dominant coin like Bitcoin. So I think there's an actual use case over the next coming years. I think it's here to stay. I think you want a slice of the pie if you don't have one. It is an inflated price. Regulations coming. I think you should dollar cost average in at this point.
I'll quickly just take the other side of that trade. Again, I'm not a hater, but I mean, Oracle is a great example. Oracle traded at $40-something a share in the late 90s. People said the internet is the future. You've got to own a piece of Oracle. Well, the internet was the future, but it took Oracle more than a decade to get back to where it was above $40-something a share. The same thing could happen with Bitcoin. Maybe not a great long-term hold as much as we think.
That's a very good point. Guys, thank you very, very much here.